Hi, today we're talking to Max Zanan from the US, an author of 5 automotive books on management, with the latest focusing on finance and insurance and driving profitability.
Let's jump into it.
With 30 years experience in auto logistics and state-of-the-art locations in 5 major Australian cities, Precar Fleet Services are a premier all-in-one solutions provider for commercial vehicle fleet operators, leasing companies and original equipment manufacturers. Please visit precar.com.au and click on the link to Fleet Services.
I think similar to you guys, you do this podcast for the benefit of the industry. There is probably no monetary compensation of any kind. This is the same reason why, I wrote the 5 books that I wrote. There's no money to be made selling books. That I promise you. The first 4 books that I wrote, they specifically dealt with the aspect of general management of a car dealership. Because in the United States, and maybe it's different where you are, but in the United States, this is a pretty much wild, wild west when it comes to licensing or educational barriers, meaning all of us, 3 of us, right, can start selling cars tomorrow. There's no high school diploma or college degree required. There's no state or federal licensing. And what happens if we're any good, chances are we're going to get promoted to a sales manager, to maybe later to general sales manager, to a finance manager. So there's a total lack of professional training in the field. And this is one of the reasons why dealers don't have a really good reputation in the United States. So like I said, the first 4 books dealt specifically with the basics of general management of a car dealership. But at the end of the day, what I do for a living is consulting on the F&I side, which is finance and insurance. Prior to COVID, F&I was the biggest profit generator in the United States. And it is the most, again, I'm sure we're going to go back to pre-COVID times where, again, a finance department is going to be the driver of the profits. And it's going to be, again, the most profitable department if you look at it per square foot. The finance managers that work in the finance department, they are the best closers that the dealership employs, because it takes much longer to sell a car. Fortunately, it could take 3, 4, 5 hours. But once the customer goes into the finance office, they usually don't spend there more than half an hour. And they come out with additional items that were upsold to them, whether it's the vehicle service contracts, maintenance contracts, or some kind of an ancillary product, for example, a tire and wheel protection. So that takes a lot of training. And these finance managers, they have to be at the top of their game to perform day in and day out. So this last book, it's called Definitive Guide to F&I. I specifically wrote about the finance department because, like I said before, again, there is no licensing. So oftentimes, people that used to be sales managers or salespeople somehow end up in the finance office, and they're being trained by another finance manager, right? So I think this is also how bad habits transcend generations. So that was one part of the book. I dealt specifically with the management of the finance department. The other part of the book has to do with reinsurance, right? Because reinsurance is, every car dealer knows the word reinsurance. They've heard of it, right? But once you start digging a little deeper, you realize that many car dealers are not up to speed on what it really means, because reinsurance is a generic term. It could mean many different things. And unless they understand what they're doing, they could be either missing out on a tremendous amount of profits, or they could be wasting a lot of money in unnecessary fees. So my goal was to demystify this reinsurance concept and explain in plain English that there are different options available and why you should or should not do it. So that was the goal. Hopefully the mission was accomplished, and there will be car dealers out there that will benefit from this book.
Absolutely, I'm sure there will be, because we share your view that the finance is the great enabler, for one thing, for people to be able to afford the car, but also it's the opportunity to add extra value to the customer. So the customer has a win, but also the dealership has a win, because it's all the value adds that you're bringing to and providing that customer that bring more profit opportunities to the business. And when executed well, it's a win-win for everybody. The customer has a win because they've got peace of mind and reassurance, and the dealership has profit and ongoing income streams, which is so important.
If you think about it, the finance department is actually the glue, right, between the sales department and the service department, right? Because if you do it right, and I'll give you an example. If you do a particular type of reinsurance where you are able to white label your F&I products. So instead of selling some third-party products that nobody has ever heard of, right? Let's say the products are called, XYZ Ford Tire and Wheel. And this product was sold at XYZ Ford. So the customer's assumption is that they have to go back to XYZ Ford for all the future repairs. So therefore, service retention, especially when you use a white label product, goes up. Or you can incorporate a disappearing deductible, right? So let's say if the XYZ Ford sells a vehicle service contract to a customer, the contract states that if the customer goes back to the selling dealer to do the future repairs, there's a zero deductible. But if they choose to go to another dealership or another independent mechanic, there could be, let's say, $100 or a $200 deductible per visit. So you try to incentivize your customers to come back. Therefore, you keep your shop busy. Your technicians are turning wrenches, selling labor, selling parts, and it's another win for the dealer.
Absolutely.
No, I think it's so important, because the other thing is once you've got finance, you then know when at the end of the term, when the customer's going to come to the end of his term of finance, and you then can be in a position to then approach a customer and try and replace the vehicle at a similar payment level or whatever, so possibly resell a vehicle to the customer. So it creates a lot of options if you manage that whole process very well.
Yes, and to be honest with you, there's still many missed opportunities when it comes to the finance department. And here's an example. Let's say the customer goes into F&I and the finance manager presents a vehicle service contract. But the customer says, you know what, John, I'm not ready, or I'm not interested. And they just say no. And it happens all the time, right? So from my experience, I have never, ever seen a post-sale follow-up process conducted by the finance managers, let's say a week or 2 weeks after delivery took place. It's just somehow this part of the job never makes it into the job description. So we just forget about it, right? And that's a huge missed opportunity, because circumstances change. Oftentimes, customers go into the finance department with their guard up, right? Because they read somewhere online that they're going to get upsold this, upsold that, and they automatically say, no, I'm not interested. But let's say a week goes by, 2 weeks go by, they already have pride of ownership. They could be home, or they could be at work in a more relaxed and familiar environment. It could be a great opportunity to present the benefits again and say, hey, I know you said no to the service contract 2 weeks ago, but please take a look at these benefits. Please take a look at how much our service department charges per labor, how much is the average repair order in our service department. And even though you bought a new car, at some point it's going to run out of the factory warranty. And like any other piece of equipment, it could break, right? But here's a comfortable way for you to purchase this vehicle service contract. And you can do this by offering financing at zero APR. Already outside of the car loan, right? And make it easy, because listen, most majority of American consumers do not have $2,000 or $3,000 laying around to buy a vehicle service contract. So that's why we try to sell it and roll it into the loan. But again, if the loan is already funded, you cannot roll it into the loan. You have to be creative and offer a zero APR financing. There are companies that specialize in that. And I am convinced that it would increase product penetration post-sale.
Now, Max, in terms of following up and selling a service contract to the customer, what success rate from your experience do dealers normally have in post-selling a product like that?
So I guess that it would depend on how it's presented. Again, if it's just presented in a way that it's, John, it's $2,500, I think the closing ratio will be close to zero. But if it's presented in a way where we can do this at $100 a month for 25 months, the product penetration goes up. At the same time, there are third parties that do this. So if the dealership is not able to install this type of a process, they can use a third party. So the third party uses a much more sophisticated algorithm, right? So not only that they would contact people, for example, that bought 2 weeks ago, they would also contact people by, they would go into your database, analyze the customer base, and they will also contact people whose factory warranty is about to expire as well, because it's also a very valid point in the ownership cycle to talk about this. I think there you can have maybe 10, even 20% closing ratio. Because, if your factory warranty expires in 2 months, you are much more sensitive to this topic than maybe 2 weeks after the purchase. So you can incorporate different strategies. But again, I think oftentimes, these finance managers do not think that this is part of their job. And that's why it just doesn't get done. I mean, I have never, ever seen it get done in a car dealership in the United States.
Yeah, I'm not aware of many dealers that even do that here. Mark, what's your perspective on that?
It's one of those moments for me, John, where it's of course, but then no. Of course it makes sense. And then you think, who actually does it? I'm sure there are those out there that will say, yes, they do it. But I'd be surprised if anyone actually did. But it might be the service department that might say, hey, you're coming out of warranty. And if that dealership has a forward-thinking, proactive after-sales team to try to sell a service contract after the fact. But you're right, actually, it's interesting what Max is saying is a very good point, because it's never the F&I guy that's doing it. And yet, if anything, it should be the F&I person. I shouldn't be sexist here, guy or girl. It should be the F&I person that actually sells the extended warranty contract. That makes sense, because you're right. There isn't that $3,000 that's sitting there. But when you package it up into dollars per month for your peace of mind, that makes a lot of sense.
Right. And I agree with you that logically thinking, the service department would be a phenomenal space to sell extended warranties. But it really doesn't happen in majority of cases. Again, because there's a breakdown in the process, right? And the service advisors, right? They are trained to sell service and maintenance. And it's a different skill set, right? Because you can show the customer a dirty cabin filter and say, hey, you should really replace it. Or you can say, if it's fear-based selling, especially let's say if it's a brake job, they're going to say, Mark, take a look at your brakes. If you don't do it, you might not make it home. So this is a completely different skill set compared to selling F&I products, because F&I products are intangible. You can't show anything, you can't touch it, you can't see it. So you need a finance manager to do it. But again, when was the last time you saw a finance manager in the service drive? When was the last time you saw that a service drive uses zero APR financing to make it easier for the customers to acquire an extended warranty. It happens, but very, very rarely. And it's another missed opportunity.
Yeah, it actually makes so much sense. It really makes so much sense that, financing, because you could almost do a fear thing as well. Like, you could say, well, here's a maintenance program. Here's a transmission that we prepared earlier that's in a million pieces, and that transmission is $16,000. So it pays to go for this extended warranty program because it'll protect you from that sort of cost in the next 5 years. Obviously, terms and conditions apply, but it's got to be maintained. Car's got to be maintained to the manufacturer's specifications, etc. But no, it really makes sense. It should be an F&I function, and that's where once again the meshing of the two departments, because often by that stage the dealership is so siloed. You've got F&I working in with new and used cars. You've got parts working kind of with service, and often they're sort of conflicting each other. And service is nowhere near connected to the F&I because they're 3 parts removed from the F&I person. And the F&I person never spends any time in the drive, as you say, Max. So, yeah, sometimes the sales consultants will go down to the drive to try to find a trade-in to upsell, but the F&I person won't.
Right. And you're absolutely correct. The silo problem is real. And it's really bad for business. And I think ultimately it's the responsibility of the dealership owner or the general manager to recognize that this is a problem. Because listen, the silo problem exists in every large corporation. But at least if you look at a company like, I don't know, a General Motors, right? They could have offices in the United States and different states of America. They can have a European division, an Asian division, an African division, right? So you can at least understand why there could be silos. And then there's research and development, there's finance, there's a sales department. But normally, right, in normal circumstances, majority of dealerships, whether it's sales, F&I, parts, and service, are usually under the same roof. They're in the same building. The worst case scenario, there's 2 buildings, right? There's the sales department and the service department. So from the physical barrier perspective, it's much easier to eliminate the silos. But again, the only way to do it is to have regular interdepartmental meetings. So a service director would meet with an F&I director and a general manager. And 3 of them need to realize that they're actually all working towards the same goal. Because if we sell a car, right, and let's say we finance some F&I products, and then the customer comes to the service department, but the service department doesn't know how to file a claim, or the service advisor, says this is not covered, right? Automatically without looking at the contract. The customer gets a terrible taste in their mouth, and most likely they're not going to come back to buy another car. So no matter what your sales and F&I department did, all of it could be destroyed by the service department and vice versa. So I think all of it has to start with a mission statement. And again, majority of car dealerships do not have a stated mission statement. And the mission statement, they have to decide what it is. Maybe it's to provide transportation to the local community. Whatever that means, right? It means maybe having cars in stock that people want in good conditions, having reliable service department with technicians that are factory trained and they know how to repair the car the first time, where there is no need to come back and redo the work. But it's absolutely critical to eliminate the silos because it's just a recipe for a disaster long term.
And Max, setting up, what sort of strategies would you use to set up and drive that F&I department in the dealership? So you've spoken about the follow-ups, you've spoken about some of your strategies. What other strategies would you do in a dealership?
I think you have to first start with staffing and understand how many finance managers do you need? Because at the end of the day, right, there are 24 hours in a day, regardless where you are, right? And laws of physics, apply to everybody. There's only so much time that the finance manager has because their time is not just spent with customers. Their time is spent getting deals approved, negotiating with the banks, trying to get a better approval, maybe a longer term or a better interest rate. They also spend time getting deals funded, because if they don't get deals funded, there's a huge cash flow problem for the accounting department. You can have millions of dollars of your cars on the road, right? And if the banks don't fund these contracts, then you might as well be out of business. So then you also have to figure out how many days a week they work, because car business is notorious for burning people out, working 6-7 days a week, bell to bell. At some point, you cannot perform at the top level unless you're given a rest, right? So what I find reasonable is for a finance manager to see no more than 65, 70 customers a month. But again, oftentimes, you speak to a finance manager and they see 100 people, 120 people. And what ends up happening is that there is not enough time to present all the products to the customers. So ultimately, profitability goes down, right? Because there are less products being sold per deal. So I would look at that first. Then you also have to set up realistic profit expectations. And again, the only way to do it is to go back into your database, look at your financial statements, let's say going back 12. And again, the last 2 years are tricky. I would dismiss them. I would really look at the pre-COVID numbers and look what your finance department was averaging historically. And let's say maybe historically it was $1,500 per car, and they were averaging 1.25 products per deal. So you set that as a benchmark, but you make it known that you would like to see some improvements, right? And you can set up a stair step and say, hey, if you add this benchmark, this is how much money you're going to make. But if your profit per car is a little higher, let's say $1,600 instead of $1,500, and your product penetration is 1.5 products instead of 1.25, you can make additional money. So you create a motivational pay plan. It's like a grid. And then you can add extra bonuses and say, hey, if all of this works out and your customer satisfaction index is, let's say, above the industry, meaning in your zone or in your state, in your country, right? If you're above the average, that's another point that we can pay you, right? But ultimately, I think it's not even the money that you have to spend, it's the time off that really resonates with people. You guys know the number one reason why people leave car business is the spousal pressure. Because, if you work bell to bell and every weekend you're at a dealership, right? And listen, it's still a male-dominated field. You don't get to see your kids on the weekend. You don't get to go see a football game, right? You don't get to see a production that the school put out, some kind of a theatrical program. You don't get to see your wife, right? So the spousal pressure builds up. And it's really important to not only pay well, but create a schedule that allows people to have a normal life. And it doesn't mean that you have to give them, every Saturday and Sunday off, but you can schedule them in a way where at the very minimum, they get 1 week a month where they're off on Saturday and Sunday. And then you can do, maybe 1 weekday and one, weekend day. But that goes so much further than any money that you can throw at them. The quality of life aspect is absolutely critical to obtaining and retaining talent.
And Max, in terms of the different types of products, besides the financing of the actual vehicles, what are the products that you think can generate the most profitability for dealers in terms of that extended warranties or maintenance contracts, or what from your experience works really well?
So I'm a huge fan of prepaid maintenance contracts, right? Because if you buy a new car as a consumer, you might say, you know what, this is a new car. I don't have to worry about it. Maybe a vehicle service contract can wait. But whether you buy a new car or used car, everybody knows, right, that you have to change oil. You have to maintain it. So in terms of the presentation, there shouldn't be a lot of resistance. The mistake that I see many dealers make is that they offer an OEM prepaid maintenance program. So you bought a Honda, right? And they offer you a Honda maintenance program, which is great, but it actually works against the dealer, right? Because first, it gives the license to the customer to go to any Honda dealer to do the work. There's no tie back to the selling dealer. Now, let's say this prepaid maintenance includes X amount of visits, but it doesn't mean that the customer will make all the visits. A lot of times people would forget the dollars that were allocated towards that visit. Guess what happens to that dollar? It stays with Honda as an additional profit center. So why not why not sell a dealer-owned prepaid maintenance that is only good at the selling dealership, that has something built in where customers are contacted and reminded to go back to the dealer to do the scheduled maintenance, something that none of the OEMs do, right? And it's still, with all the follow-up, from my experience, about 25% of people will not take advantage of it. So that 25% breakage or forfeiture goes back to the selling dealer in this scenario, as opposed to the OEM. So I think that's an extremely effective tool to not only sell the product, but to drive customers back to your service department. And maybe on the first few visits, a service advisor is not in a position to upsell anything because it's still a brand new car. But there's an element of building a relationship between the customer and the service advisor and building trust. So then maybe, a year or 2 years down the road, when the service advisor says, hey, John, by the way, you need to do the brakes, there's already trust established and you know each other, and it's a much easier conversation with probably a much higher closing ratio.
And Max, for used cars, is there lots of opportunity to sell those same sort of contracts on used cars? Should dealers be looking at that type of thing? Because the OEM wouldn't have those contracts for used cars, the prepaid maintenance.
Listen, you have to maintain new and used cars at the same rate. So the prepaid maintenance works for both, and it works very, very well. So I wouldn't separate new and used cars. I would treat them the same. And same goes for something like interior and exterior protection, right? Everybody wants their cars to look great, whether it's new or you want your used car to look like a new car. So these are also, and I think interior and exterior protection is the only product in F&I that's actually tangible. Because if you apply the product to the car in a showroom and you show the customer the difference, for example, when you do the interior treatment, right, it becomes a repellent. So you can spill a cup of water or a cup of coffee, right, in the car, and it gets repelled. It doesn't get stained. And that's a very powerful presentation, especially, if the customer, if they have little kids. These little accidents when you spill milk or orange juice in the car, happen all the time. So with an effective presentation, I think you can have a much higher penetration.
It's a very, very important topic, and I think you're right. I've just listening to what you've outlined. You've mentioned all the products that we know we sell through the network, through dealerships, but I think the key differentiator here is to involve F&I in each one of those products. Like there's obviously the standard finance insurance on the new car, the standard finance and insurance on used cars. That's a given. But it's actually introducing the F&I into the service department where the emotional attachment is with the customer and the car. They've had the car ready for some time, so there is that buy-in that's their car, that's their nuts and bolts and wheels and tires. So if you want to add value and protect it, let's go back to what enabled them to buy the car in the first place, which is basically F&I. And the key strategy is to engage the F&I and have a conversation, in the dealership, and a conversation where you have cross-departmental interaction and buy-in as to how you can increase penetration. And I think, Max, your point that you raised before, if I'm going from a 1.25 to a 1.5 ratio, means X amount of dollars for everybody. And I think this gets back to where there's even just the compensation, the packages offered to all the various directors or GMs in the dealership is that usually the service department only has a KPI for service. But if there was a percentage of their remuneration that is actually cross-dealership, whereby if I'm the service director or service manager, my KPIs are X for service. But if I get say even 10% of my remuneration relies on total dealership sales performance, I'm then going to be motivated to do more in my department to help sales volumes. And the same flips from the sales guys. The sales guys, if there's a certain percentage of F&I penetration in service that forms part of my remuneration, I'll make sure the F&I guys are doing their best to sell F&I into the service customers. And that's the critical piece to really get F&I into the areas that traditionally don't play or that we don't think of or the majority of operators don't necessarily use F&I in. There are operators that do it, and it's great. Those out there, credit to you that do it. But I think Max's point's a very good one, is that they're the minority. The majority don't do it. And this is where there's a huge opportunity to actually increase that penetration using very much the basics of the finance being an enabler.
Yeah, absolutely. And you make a good point about pay plans. Pay plans drive behavior. So you're right. You have to incentivize people, right? So just because if you don't incentivize them, it's very unlikely, right, that a service manager is going to get proactive with the finance department because he's going to choose the path of least resistance. And same goes for a finance manager. Why would the finance manager go to the service department if there's nothing in it for him or for her? So it's the real art to create a pay plan that really accomplishes the owner's goals, right? Because oftentimes there's standard pay plans in the industry, right? And we just use those pay plans without thinking. And in most cases, nobody gets compensated on the entire production except for the owner and maybe a general manager. So that's an important point. The easiest way to connect F&I with a sales department is to actually give away finance products for a very short term with the purchase of the car, right? So you would put an addendum sticker on the car and say, hey, John, if you buy a car from our dealership, 1 year of paint and fabric protection is on us. So now when the customer gets into, and at the same time you can say, and 1 year of prepaid maintenance is on us. That's what makes us different, right? That's how we stand out from competition. Because at the end of the day, cars are the same, right? So if you're looking to buy a Toyota, or let's say Toyota Corolla, right? I mean, there's two dealerships selling Toyota Corollas. These Toyota Corollas, they're identical. You can't say that my Toyota Corolla is better than theirs. They're both new. They're both great, right? So if you put this addendum on a car, and when the customer goes into F&I, the finance manager has a much easier conversation. He says, hey, John, congratulations on the purchase of a car. As you know, you get 1 year of prepaid maintenance on us, 1 year of paint and fabric protection. For an additional, I don't know, $7, $10, $20 a month, would you like to extend that to 3 or 5 years? So now you already got some products on the car, and from the perspective of reinsurance, that's really good for the owner. You also made it much easier for the finance manager to upsell these products to a longer term and generate additional profit, which kind of offsets the cost of the preloaded products. So again, it's a win-win. But most dealers, unfortunately, it's like a defense mechanism. They're like, oh, I'm not going to preload anything. It's just extra cost. It's only extra cost if you don't reinsure it. If you reinsure it, it's an extra profit center for you.
But in terms of that, do you only qualify for that preloading if you take out the full contract? Or if you say, no, I don't want to extend it, do you still get the year free?
Yeah, you still get the 1 year. Yeah, absolutely. It's you want to be honest about it, right? You don't want to be like a bait and switch. So you definitely, honor the deal, right? And again, smart dealers would use that strategy for marketing. It would be in their advertising. It would be on their website. If you buy a car from us, 1 year of prepaid maintenance, 1 year of this, 1 year of that is on the house, right? So it's very effective.
No, it is. That's Max. It's those aha moments, isn't it? It's of course. Why didn't we think of that? It's so obvious. It's staring in the face, but it's only staring in the face when Max comes along and points it out, and you go, "Of course."
At the end of the day, right? Car business is not complicated, but sometimes we completely forget about merchandising. Like when you go to, a supermarket, they're really good at merchandising, right? They will put some items that are on sale when you enter the store. There's science to it, but let's say, forget the finance products for a second. Let's talk about accessories, right? Accessories could be a tremendous profit center. But statistically, if you look at it, majority of people in the United States buy their accessories from third parties. It's a tiny, tiny fraction that car dealers have when it comes to sales of accessories. Meanwhile, it shouldn't be that complicated, right? Because you know that people are going to buy these accessories, so make them available, right? If you go to majority of parts departments, they probably would have a very small accessory display, and most likely there'll be no pricing, or the pricing would be without installation, as opposed to just making it easy and say, hey, these running boards are $700 installed. And again, put a price on it and maybe dust them off, right? Like the amount of dust on these displays is just mind-blowing. Or, you can get creative, especially when it comes to SUVs, right? There's a lot of accessories that you can put in an SUV. So what I like the most is when you take a car and you accessorize just one side. So you change the rims, you put the running boards, you put some other stuff. So it becomes like an optical illusion. When you show the car from this side, it has all these accessories and it looks phenomenal. And then you take the customer to the other side and you give them an option. Say, hey, how would you like it? This way or that way? Because again, we have to reclaim the market share when it comes to accessories. And listen, the same thing goes for oil changes. I mean, in the United States, we have a company called Jiffy Lube, Valvoline, Firestone, right? Their entire existence based on the fact that car dealers cannot schedule an oil change appointment, right? Their business model is just doing oil changes and doing small upsells, right? They can upsell a cabin filter, an oil filter, windshield wipers, light bulbs, something that car dealers are not that good at. And these little adjustments, make a huge difference in your bottom line.
Max, thanks very much. It's been a fascinating discussion. Implementation is always a challenge, but I wouldn't say it's easy to implement, but it's things that can be done without huge expense to the dealership. It's just managing it better and motivating people better and bringing that all together.
So Max, how do people get your book?
So the book is available on Amazon. You can get it as a paperback. It's also available as an audiobook through Audible or through iTunes. And you can also get it as a Kindle through Amazon as well. So however you digest information, it's available in every format.
It definitely makes a lot of sense. And a good read or a good listen if you're going to be using it as an audiobook. One that's going to make you money.
Right. Especially, we all drive to work. Me personally, I prefer audiobooks. And the audiobook, I think, is maybe 2.5, 3 hour stops. You should be able to find 2.5 hours, driving back and forth from work. Yeah.
Oh, absolutely. And no doubt listen to it a couple of times just to really get those really good ideas and just see how you can roll it out in your own business. I think that's a critical point to that. Yeah, get that really good understanding, because what you've covered off today with us, I must admit, it's so blatantly obvious, but you kind of think, yeah, why didn't we think of that? Yeah, that's something that really makes so much sense. And it's actually quite simple to execute without, as John said, without a huge expense. In fact, a lot of it's just basically getting a group of people together and working out, well, okay, how can we do this and how do we roll it out effectively? But no, what you've definitely shared with us today has been fantastic. And thanks, Max. Really appreciate it.
Thank you, gentlemen.
Thank you for listening. Hopefully you got as much out of the discussion with Max as John and I did.
Remember to subscribe to us on YouTube, Spotify, and iTunes. We'll speak to you again next week.